Hello Wolfpack. The bottom is a lot closer than some people would like to think on Bitcoin. That's my theory, that's my speculation. Now, I think on Bitcoin, the bottom will be in Q4. I've made it very clear over the last, 10 months, I think that's the case. And I've been, again, it's saying that's in 60K-ish in November last year. Q4 is going to be the bottom, in my opinion. Now, we're getting very close to Q4, and that's the thing. It's like we're getting close to Q4 to the point in which we're basically in Q4 in regards to a longer-term date range trend, right? We are, 22 days away from Q4? If we bottomed out tomorrow, I would consider that a successful prediction. I mean, my prediction in itself, and I'm not just bailing out by saying that. My prediction in itself is vague. It's vague for a reason. It's vague because it can't be precise. We don't have the data for it to be precise. The fact that I'm giving you a 3-month time frame in Q4 as to where the bottom will be gives you an indication that it's not exactly a prediction that I'm waiting for October 1st before I call it the bottom. Or I'm waiting until December 31st. If it's a few days, few weeks out, that doesn't matter to me. Now, we do have methods to nail down that prediction. I have actually nailed it down a lot. In fact, I've determined that we will be bottoming out before December 3rd. So it's not necessarily a Q4 prediction at this point. It's actually between October and December 3rd. So it's more of a 2-month time frame now. I've hammered it down a little bit over the last couple of weeks. And I'll get into that in a second. But the main thing I want to talk about today is the fact that by all old metrics, the bottom is very close to being in. And by all old metrics that we've used in previous cycles, and I know what the counter argument to that is, by the way. The counter argument this time's different. Okay, yeah, I understand. But by all old metrics, the bottom is very close to being in Bitcoin. And by all old metrics, the bottom should realistically be in at a double bottom at 17.5K, or at least a double bottom near that price region. And that's what we're going to be discussing about today. Because, look, the 4-year cycle theory is probably the only metric I would put full belief in at this point on Bitcoin. I genuinely believe in the 4-year cycle theory. I think it's a very strong date range trend. I haven't seen one single YouTuber, by the way, and I don't know why this is. I haven't seen one single YouTuber draw up the 4-year cycle theory in the same way that I've drawn it up. And I think that's why it gets a lot of negative stigma. Because people don't actually extrapolate the data in the same way that I do here. I've taken measurements from the top to the top, from the bottom to the bottom, to the top to the bottom, and then from the bottom to the top. I've applied it all, extrapolated it all. And as you can see here, as per the color codes, you can check to see, we've got a clear trend here. We've got a 1,400-day trend from top to top on 2 separate occasions. We've got a 1,400-day trend from bottom to bottom on 2 separate occasions. And we've got a 1,064-day trend from bottom to top on 2 separate occasions. So, look, and we've also got a 400-day trend from top to bottom on 2 separate occasions. Now, look, you could say, okay, well, you need 3 data points to have a trend. And as I said there, I've only got 2 separate occasions for each of those data points. But the point is, you need 2 data points to have a trend when it's only one sample, right? One data, I guess you call it data sample, one specific thing you're measuring. When you've got 4 separate things, 4 separate metrics, days from top to top, bottom to bottom, top to bottom, and bottom to top, 4 separate times with 2 data points each, and they all line up perfectly together, that counts as a trend in my opinion. And I have no evidence to believe at this point that this trend will not be respected. I think a lot of people would agree with me, whether you believe in the 4-year cycle theory or not. I think by coincidence, a lot of people will agree with me that the bottom will be in Q4 this year, or it's coming up very shortly within the matter of the next couple of months, right? Or even weeks, right? And that's what the 4-year cycle trend really shows. Now, you could say, well, what about the recession? You could say, well, if the 4-year cycle trend, if, say, for example, if the recession keeps going and we keep getting higher inflation, higher interest rates going into, Q1 next year, Q2 next year, which I think is incredibly unlikely, by the way. I think that the peak is almost in for inflation. I think that the peak is almost in for interest rates as well. Maybe a couple more rate hikes. If you could say, well, what if the recession keeps going on? Wouldn't the Q4 bottom be invalidated? Wouldn't the 4-year cycle theory be invalidated? To that, I would say, you're assuming that Bitcoin acts with the rest of the markets, and it does, okay? That's the thing, it does. However, it doesn't do it perfectly. And all we need to see that is the fact that, well, look when Bitcoin topped out. Bitcoin topped out here in November 8th, roughly, as the weekly chart suggests. In November 8th, we topped out on Bitcoin. Let's go to the S&P 500. The S&P 500, I don't know what this chart is, the S&P 500 topped out here in December and January, actually January. So the S&P 500 topped out 2 months later than Bitcoin. By the time the S&P 500 topped out in early January, Bitcoin was already down 52%. Okay, so don't act like these things move together perfectly. Don't act like Bitcoin has to only bottom out when the recession is over and when the S&P bottom is in as well. That's simply not the case. We were down 50% on Bitcoin before the S&P 500, before the traditional markets even begun to top out, right? Why did that happen? Well, it happened because they're not perfectly connected. They're not perfectly correlated to each other. So no, yes, Bitcoin can bottom without the recession being in, the top of the recession being in. It can certainly do that, and that's proof of that. And you know what else this is proof is? Well, it's proof of the fact that the 4-year cycle on Bitcoin is stronger than any third-party influence. Why? Well, we topped out early. Why did we top out early? Why did we top out earlier than the rest of the markets? We topped out early because the 4-year cycle theory, by 2 separate metrics, the bottom to top metric and the top to top metric, was predicting a top in November. So instead of following the rest of the markets, which you would expect it to do, we actually followed the fundamentally based in the halving 4-year cycle date range trend, and we topped out earlier than the rest of the markets. Now, knowing this, we can certainly bottom out earlier than the rest of the markets. The inflation top does not need to be in for Bitcoin to bottom out. That's a very important point. So we've established here that by all means, Bitcoin can bottom out without the inflation and the recessionary top being in. And by all means, the 4-year cycle theory is a very strong date range trend. And by all means, the bottom will very likely be coming very shortly and possibly at 17.5K double bottom. Let's check that out now. Well, there's a few things about the 17.5K double bottom that are interesting. I'm going to start small. I'm going to work it up to big, okay? The first thing is this. 17.5K, of course, is the region we bottomed out in June, okay? And generally speaking, this is obviously preliminary data, but generally speaking, what do we see in bear markets, right? We don't see a sharp V-shaped recovery. We see a first touch of the bottom. We come up for a bit, we lurk around for a couple months, we come down again. Second touch, double bottom formation, 2015. What do we do in 2018, right? We come down, first touch of the bottom, we lurk around, we come down again a month later, we touch it again in a double bottom, roughly a double bottom. And in fact, we actually came down again during COVID and touched it again. Okay, so that's what I would consider both of these occasions, whether they're double bottoms or not, doesn't matter. They're rounding out at the bottom. We don't see V-shaped recoveries at the bottom. The only time we've ever seen that is COVID. That's because it was a sharp move. It was caused by insane volatility. Even in market corrections, okay, even in general market corrections, what do we see? What do we see in 2015, here in March 2015? Rounding out. What do we see here in May to July 2021? Rounding out. What do we see here, earlier this year? Rounding out. Yeah, we went down further, but we rounded out. We see rounding out on longer term macro consolidation zones. We round out. That's what happens at the bottom. And that lines up with the double bottom on Bitcoin, right? So if we were to see a bottom form, most likely, unless it's a unique circumstance, which of course can happen, but it's not something we would rely on, we would be seeing a double bottom form, and that double bottom roughly would be at 17.5K. On top of this, we have bullish divergence stemming from 17.5K, and we're getting close to a bullish MACD cross as we head towards 17.5K. So that's evidence for a 17.5K bottom. Now, on top of all of this as well, we do have a pretty intense month coming up. Okay, and that's not evidence for a 17.5K bottom by any means, but it is evidence of the fact that something could happen at 17.5K that could be unexpected to the majority of the market. And as you know, the majority of the market at this point is bearish. Now, we have CPI on the 13th, which is just under 7 days. We have the Ethereum merge on the 15th, and we have FOMC on the 22nd. There is a considerable chance that the inflation top is in. Okay, there's a considerable chance. Now, would I say it's likely? I don't know if I'd go as far to say it's likely. What I do know is that we will be able to find that out on Monday, as on Monday, the market predictions for inflation come out. Okay, so starting next week, the market will be able to have those predictions for inflation ready. Now, look, confirmed. Okay, so look, we've got, 6 days until CPI comes out. Okay, 6 days until CPI comes out, maybe 5 days. Okay, we can reach 17.5K in 5 days. When that event happens, if it's bullish, we could very well bounce strongly off of 17.5K. And if the Ethereum merge goes well, guess what? We could bounce even further. And guess what? If FOMC comes in and we see a rate hike of 50 basis points instead of 75, we could bounce even further. It is very easy now for Bitcoin to bottom out at 17.5K. I'm not saying it's going to happen. I'm saying it's very easy. And September would probably be the month in which we do it. Moving forward. In terms of date ranges, how close are we getting to the bottom? Well, this is very clear. I consider the macro trend reversal point to be a breakout of this downtrending yellow line that I've got on the screen here. Now, I think the lowest Bitcoin can possibly go, right? I don't see us going any lower than this, is 11.5K, okay? Now, I think that's actually unlikely we're going to get that low, but I'm saying that that's the lowest we can possibly go, in my opinion. Now, even in that scenario, we go the lowest we can possibly go to 7.5K. The lowest we can bottom, the latest we can bottom out as per that prediction is around November 27th. Okay, I had December 3rd when I did the calculations earlier. Let's just say December 3rd. Okay, so even by the lowest we can possibly bottom out, in my opinion, the latest we can bottom out is December 3rd. So, you know, what about, okay, and why is that? Well, it's because if we get down to this price region, we're going to have to either make a move down, which I think is unlikely, or up and break the trend. Okay, so what if we bottom out at 17.5K? When could the bottom be if we bottom out at 17.5K? Well, the bottom could be as soon as the middle of October. In fact, the latest the bottom could be if we bottom out at 17.5K is the middle of October. So we could see something like this. We come down to the bottom, bounce around for a bit, break out to the upside. And that would be a rounding bottom formation similar to what we had in previous bull markets. In fact, it would be a W double bottom formation. So look, to think that the bottom is months and months and months and months away still is ridiculous. And there's more evidence for that. Well, what else is there? Well, there's evidence coming from how strong the 17.5K support zone really is. Not only is 17.5K a place we touched here, it's also a place we touched in early 2020, and it's also where the 300-week SMA currently is, and the 300-week SMA, as you know, marked the bottom on Bitcoin in the COVID drop, which was peak volatility. 17.5K is also a minor weekly support resistance from 2017 as well. So 17.5K by itself is not actually a random zone that's just been picked out of thin air. It is a minor support, and it does have a major moving average support coming up to it as well. So it's a considerable support zone. On top of this as well, you know, what can we see? Well, we can see on the weekly chart using the pi cycle top and bottom indicator that the pi cycle bottom has triggered, okay? And it triggered on the drop in June, okay? And why is this interesting? Well, it's interesting because in 2015, it triggered in January 2015. We still came down later in the year and formed a double bottom. It triggered on the first bottom, and on the second bottom, we bottomed out. Okay, same in 2018, it triggered on the first bottom, and on the second bottom, yeah, we didn't quite reach it again, but we did bottom out, okay? And we've triggered it on the first bottom here, and if we come down and reach 17.5K again, we could very well bottom out, all right? So this is interesting now. And then on top of this as well, and there's more evidence, okay? On top of this as well, on the weekly chart, as you can see here, on 29 on the weekly RSI, that marked the bottom on Bitcoin in 2015, it marked the bottom in 2018, and we've just dropped below it a little bit, but we're coming down to it again, and when we reach 17.5K, we will be testing it again. It could very well mark the bottom in 2022. Moving forward, on top of all of this, on the monthly chart, 44 on the RSI marked the bottom in 2015, 2018. We've moved below it slightly, but we are in the same region, and it could mark the bottom in 2022. And then, of course, CBBI, which is the colon talks crypto Bitcoin bull run index, right? Which takes a a variety of different measures and measures when the bottom is going to be in, when the top's going to be in, which has been pretty accurate in the past, by the way, is saying that we're very, very close to the bottom now. Okay, so, you know, long way of saying, this is a 13-minute video long, long video of saying something that I could say very quickly, okay? Don't get overly bearish. There is a very strong possibility that Bitcoin bottoms out, not only within the next month or two, but also within the next $2,000 in price action. 17.5K could very well be the bottom of Bitcoin, and it could very well happen a lot sooner than you think, even within the month of September. If you're interested in becoming a VIP member with the Wolves of Crypto YouTube channel, you can go to my YouTube homepage and you can click on the join button. This will open up a tab that shows you all of the perks you get for becoming a VIP. I'll quickly go through them now. There's 4 trading setups per week in spot and short positions, which is the main thing that people join for. Additionally, you've got prioritized reply to comments, meaning I will prioritize replying to your comments over people who are the free subscribers, the free channel members, because obviously as the channel grows, there's going to be more and more comments. I'm not going to be able to get back to all of them. And so the VIP members, I will prioritize getting back to first. We've got a 2-hour lecture on market psychology, which many people have said to me is the most valuable video I have made. And then we've also got exclusive Telegram group access, where you gain access to a Telegram group in which VIP members share charts and discuss trading strategies and ideas and the signals that I post into the VIP group as well. All of that is just 40 AUD a month, which works out to be around 28 USD a month. If you're looking for an exchange to use for cryptocurrency trading and you're sick of your current exchange, or you're just looking for a better exchange, I'd highly recommend you sign up to the BitGet Exchange. There's many reasons for that. The first reason being it's non-KYC, which means it lines up with the fundamental values of cryptocurrency, decentralization on your end, which is perfect. It's also got 5 times lower fees than Binance, which is insanely cheap, which means you'll be saving a massive amount of money by trading on this exchange, which of course is one of your main intentions. On top of that, so it's 5 times less fees than Binance, it's decentralized, and on top of that, not your keys, not your crypto. That's not really a massive problem with this exchange because they've got a protection fund, which they've dedicated 6,000 Bitcoin and over $100 million into that protection fund in order to secure the funds of the users. Meaning, if something happens on the exchange and you lose your funds, it's not guaranteed, but there's a very good chance that you'll be able to recover those funds through use of the exchange's protection fund. And the last thing as well is if you sign up using my referral link, which by the way would support the channel, I'd highly recommend you do that, which you can find in the description below. If you sign up using my referral link, you can gain access to a reward center as well and gain access to over 4,000 USD in rewards by completing various tasks. So lastly, I'll just say it again, please sign up using my referral link. It takes 5 minutes and it helps out the channel a lot. Thanks, guys. I'd also like to give a quick shout out to the Crypto Academy. This is a course developed by myself and Megawa Crypto. We're teaching people how to trade. Become a trader. A 10-unit course is, like the title, a 10-unit course that teaches people how to become traders. We teach people how to analyze charts. We teach people how to take profitable trades, how to master TA, whatever it may be. You can go on the website and you can read a bit about this, but ultimately I'll give you a quick rundown. 10 units, starting from fundamental cryptocurrency concepts, going through to technical analysis, going through to market patterns, indicators, candlestick formations, profitable mindsets and psychology, and then finally how to find trades. We've got about 450 slides, 80 videos, 8 worksheets, and a trading diary, which means we're targeting all of the core psychological groups of how to learn things, right? We've got visual learners, we've got verbal learners, we've got people who learn using practical skills like practice. We've got many different things there. We're targeting all those groups. We've also done an extensive market analysis on what TA courses are currently available. And we can tell you right now, for the price you're paying for this course, and in general, this is the most extensive course you will find that finds all of the information relevant to teach you how to trade, gives you lifetime access after a one-time payment. So if you're interested in finding out more about the course, go ahead and email cryptoacademycourses@gmail.com and we'll get back to you with all the relevant information. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Bye.